Hi, welcome to the market alert for Monday, the 26th of February 2018. So on Friday in the pound, we had a couple of signals. News came out here. It wasn't official news. I don't know what it was. It must have been something to do with the customs union or some other aspect of Brexit. Shot the market down, and then the market moved back to the upside. Now I was expecting this to continue down, but as soon as the market hit the 76% retracement, it was game over. I'm just going to remove this so you can see it a bit more clearly. And since then, the market has rebounded, which you can see even on the overnight there. Prices are starting to move higher. So what I would do here is go from this high here down to the low of Thursday, and there you can see the market heading back towards the 62% retracement there. So on Thursday the market hits the 76% retracement there, and then Friday we get this reversal and starting to move higher. Now if we have a look at the dollar index, I'll find the right chart. There we go. Just bring that in, make it a bit easier to see. So the dollar index has come back below the 76% retracement, having closed above it earlier on in last week. That must be about Wednesday, Thursday, Friday. That would be Friday, and then we've got the overnight there. So now the market could actually move lower, and we'll draw that one up in a couple of days. We'll just go from this low to this high and just see how far the market comes back in this area. It's going to determine whether the dollar is going to continue lower, but at the moment all things have changed. It looked like the pound could move lower, but as we see here, it's starting to move back to the upside, and you need to watch these two areas as the market continues to move to the upside, or should it continue to move to the upside. Super Mario's out today at 2 p.m. It'd be interesting to see what he's got to say. He's not a lot these days. It'd be interesting to see if he's going to start and reduce the balance sheet the same as the US have been doing. I very much doubt it. They're still printing and will continue to do so. I think it's until September, and then they start to look at unwinding, and they're going to drop it by 50%. And in the Dow for Friday, let's have a look at this one. Market turning around, moving back to the upside once more. And here with the default settings that we have 8 to 25 in the bar range, you can see that the signals were coming back in as the volatility dropped. Bit choppy to begin with. First the market was up, then it was down, then up, then some buying pressure, and eventually drops, and then free to move. It went sideways through here, and then just before the end of the session there was a massive rally in the bond market, and this sent the Dow screaming back to the upside, which again is what I've maintained. A lot of people saying the market's going to drop. I disagree at this point in time. They want the market back up. They're going to fight tooth and nail to get the market back up. Yes, at some point it's going to come back down and give back all of these gains. There's no doubts about that, and we're certainly heading in that direction. That goes without saying. The debt continues to grow, and even the front page of the FT on Friday, the OECD were talking of the 25 trillion global debt in banking debt and all sorts of other, well, global debt. It's just lump it all into one basket. In 2008, 25 trillion, now 45 trillion. 10 years later, so into an increasing rate environment in the US, and also the end of a 10-year business cycle, and also something that just reminded me I need to show you, which I will get to at the end of the video as well, when we were looking at interbank lending the other week and the precipitous drop off in this. I'll come back to that in a moment. So yeah, the Dow needs to move higher. If it's going to continue through here, watch the 76%. This is going to be the crucial area, this area here, if it can get through here. And if you're long, watch this area here, because this could be the stumbling block. But a good rally back at the moment for this market. On the volatility side of things, we were down on Friday, which again you would expect. We've got 1352 down from 1571, so coming back down into these lows now. This market is certainly starting to show some sort of pullback there. The reason I'm pausing a bit is I don't think you can actually see this properly. I'm just going to adjust the screen a bit. There you go. You should be able to see that now. Just noticed that it wasn't quite capturing what I want you to see. So yeah, 13 from 15 there. Well, 14. It's down a point or so. In the cryptosphere, we've had the move up. We're getting the pullback, as I've spoken of before. This area here, and any of these will do as the market continues to pull back. You'll get up days, of course, but we'll watch this trend line here if the market does. But otherwise, we're going to look at these areas here. Right, let me just grab what I want to talk to you about with regards to the interbank lending that we looked at earlier this month. So last month I just happened to come across the interbank loans and lending, obviously between banks, had fallen off a cliff, and don't know the reason behind this, apart from the most logical one is that given the amount of debt between all of the banks and everything else, that they see that they should tighten their belts and stop lending to one another, or there's some sort of risk with derivatives, whatever it is. And then we saw the close-up of it, a huge drop-off. And again, it's just very, very strange how you can go from 60 all the way down to 13. But what's even more of a mystery, and the sleight of hand of the central banks as ever, is now they have discontinued updating this chart. So there's definitely something going on. Notice also that they have removed that sudden drop-off as well that I reported at the beginning of this month, or it was January, whenever it was, and they've taken it out. So again, it just shows you, as I say, the sleight of hand that they're prepared to go to. So this big drop-off here is wrong one. Let me just switch that. It's been removed, but that doesn't surprise me. The corruption of the central banks never seems to amaze me. They're corrupt from the start, frankly, with the fractional reserve system bailing out the banks and so on and so forth. And I'm not on my own with that one, I wouldn't have thought. But yeah, interesting again, like I say, they're up to their old tricks. If it's not working, or it's going to reveal that it's not working, then the best thing to do is to discontinue it. And this is not a single case either. Just doing a bit of research, there are over 14,000 different financial charts and calculations and whatever that have been discontinued over the last X number of years. I mean, the Federal Reserve has been around an awful long time. So I suppose 14,000 removal of sleight of hands and things that they'd rather people didn't know about is probably not uncommon, given the length of time the Federal Reserve. But this is the latest one, and also removing that figure again stinks, frankly. So good job, managed to grab the screenshots of this beforehand, as I say, they're up to their old tricks. Right, that'll do it for this one. If there's anything to report today, I will let you know. Other than that, as ever, thanks for watching. See you in the next one.